Good morning. In our third webinar in the Blocks project, we are having a look at the Italian blockchain ecosystem. And thank you all for being here. I'm Roxana Voicudorobanțu. I'm the project manager of Project Blocks. Before we dig into the conversation about the Italian ecosystem, a few words about our project, which is just, my poetry at the beginning of each webinar, and I gotta recite it. The purpose of Project Blocks is to bridge the gap between the practical and the theoretical. I mean, to bring what the industry is talking about regarding technology to other audiences, such as economists, such as industries which will be affected by the blockchain, such as education specialists, and so on and so forth. My organization, the Bucharest University of Economic Studies, is, as its name says, an economics university. The blockchain is not studied per se. However, the effects of such a technology in the economy are expected to be quite significant. So when we had the idea about this project, we thought that we should learn as economists more about the technical part. Throughout the project, the 2 years of the project, we are just now entering the 3rd year of the project. So throughout these 2 years, we actually found out that we need a common dictionary, because technical people talk about some things. Economists talk about other things that at some point these dictionaries don't overlap. So we have to do that, and this is the purpose of this story. Now, I would like to thank our partners, Viteco. They are part of the Blocks ecosystem, for doing the awesome effort of bringing 4 great specialists in the blockchain in the Italian ecosystem, and Beatrice is the very optimistic Viteco representative today. Hopefully at our next webinar, we will have Giuseppe Ursino, who's the CEO of Viteco, to join us for a bit of a chat as well. But Beatrice, that being said, the floor is yours. If everybody has any questions regarding our project, go visit our website or ask them in the comments. Before passing the floor to Beatrice, a little bit of a administrative part, a logistics part about the webinar. If throughout the presentation of our specialists today and throughout the conversation you have any questions, feel free to write them in the live part of, in the comments of the live part of our Facebook. We will be able to see them and answer them. That being said, Beatrice, the floor is yours. Thank you.
Thank you, Roxana, and good morning, everybody. I'm Beatrice Carbonaro, and I'm the European Project Officer of Viteco. Viteco is a provider of technologies for long-distance training, above all, e-learning platform and serious games. Today, we will speak about blockchain, and more details, we will speak about how blockchain is changing the traditional economy. And we have the chance to talk about this interesting topic with 4 Italian experts who will show us the different aspects of this changing. But I don't want to take any more time, and so I will give immediately the floor to Elena Pasquali, CEO of ECOSteer, an IoT and blockchain software company. Thank you, Elena. The floor is yours.
Thank you very much. Can you see my screen? Good. Well, thank you very much for having invited me to this event. I am Elena Pasquali. I am the CEO of ECOSteer. ECOSteer is an IoT and blockchain software startup, and our objective is to build a new decentralized data economy. Today, I would like to discuss with you, whether is it possible to address the contradiction between smart everything and, the Internet of Things and data privacy? And why is this topic important? Well, it's important because by 2030 in our cities, we will have more than 70 billion connected devices. What does that mean? Well, it means that every physical asset, every physical personal asset, and every physical corporate and city asset, as well as ourselves, will become sources of data streams, and we will become what is now defined as our digital twins. So we will be able to have all of these data streams available describing our cities. And, all of these streams hold the promise to make our cities and our life so much better. And we've had a clear example of that during the pandemic with, the tracking applications. We all discovered that actually where we go could be a fundamental information to prevent the spread of an infection. And, the tracking applications have actually divided us into two fields. On one side, the integralist, those of us who said, well, I will never, ever share my data with anyone. On the others, the resigned, those of us who said, well, I'm already sharing my data with God knows who for idiotic reasons. I might as well do it for a very good purpose. So is there a way to actually reconcile smart everything and data privacy? Well, we think there is, and it's actually blockchain. Let's think about it. The key feature of blockchain is the decentralization based on consensus algorithm. What's the benefit of decentralization? Well, it means that every transaction between individuals, between entity, does not need anymore a centralized authority to execute the contract between the parties. What's a transaction? A transaction could be, something simple as selling your car or selling your home, but it's actually also sharing our data. Today, we need to trust a centralized authority to execute the transaction, to execute the contract between the parties. The blockchain eliminates the need for the central authority, and it enables us to execute transactions between us. As I said, then they could go from physical transactions, money transactions, as well as data sharing by using smart contracts in the blockchain rather than contracts executed by a centralized authority. Transaction decentralization in the realm of data sharing and data exchange will allow us, the citizens, to have access control over our data, and that will mean increasing our willingness to collaborate in making our cities a better place, what I call digital participation. Today, we know that we live in a centralized economy. And it's centralized in two ways. It's centralized, first of all, because it's a monopoly, as you know, in the hands of a very few companies. And it's technically centralized because every time we share our data with any of the platforms we use daily, we lose control over it. And the control is in the hands of the platform. So it will be the platform who will decide which third parties will actually have access to our data. We think an alternative is possible. And in fact, in Europe, the General Data Protection Regulation establishes the principle of data ownership, which is the legal foundation for a different decentralized data economy. So if the GDPR establishes, the legal principle of data ownership, new technologies are required that can actually enforce this principle. And ECOSteer has developed one such technology, our data ownership platform. It works as a layer, as a data sharing governance layer that allows data owners to control access to their data unilaterally, disintermediating completely the data distribution platform. How do we do it? Well, we do it by establishing a direct relationship between a data owner and each potential data user using smart contracts. And the smart contracts sets the conditions for data usage, its value in tokens, and it allows the data owner to grant access to her data and to revoke it. Technically, how does that happen? Well, it happens through an end-to-end decentralized data encryption method that actually we have just, patented in the US. our patent has been granted at the beginning of the month. And it's the data is encrypted at its source, and it can only decrypt it at its final point of usage by explicit consent of the data owner, consent that is expressed through the smart contract. The platform doesn't have access to our data any longer. So how can this technology be used? Well, it can be used in data streams marketplaces, where we can exchange our data with tokens that we can use to purchase services provided by all the participants in the marketplace. And we envisage corporations to build their own marketplaces, cities to build their own marketplaces, and they will all have different features, but they will all have two key features in common. We, the data owners, will have full visibility over all the parties that desire access to our data, and we will be able to grant access to our data and to revoke it unilaterally at any time. And we will be rewarded for sharing our data with tokens that we will be able to spend on the marketplace. So what does it mean for our cities? Well, it means that, using the possibility of creating digital twins of ourselves and our assets to share data in a controlled way and being rewarded for this sharing. This will promote digital participation and will enable companies of all sizes and institutions, as well as citizens, to have access to unprecedented information that will enable not only to know what happened in the past, but to prevent problems from happening. And this will mean the rise of a new decentralized economy where everybody will participate in the value generated by data. And I look forward to building it with all of you. Well, thank you very much for your attention, and I am available for discussion and for questions.
Well, thank you so much, Elena. It was a very interesting insight into this, particularly as the discussion about the access to data has appeared in the past 6 to 8 months, and Italy has been hit quite hard with the whole coronavirus. Romania's right now hit really hard about it. So we had this conversation at European level about applications that are using our data in order to mitigate the risk of the virus. How do you think into your story, into the product and the service that you sell, quote unquote, how do you think digital altruism fits? I mean, providing my own data free of charge, not expecting any token, but for the greater good of the society. And we have a question from the audience.
Well, you see, I see digital participation as really the way for citizens to participate in public life in the future. But we all know that, psychology teaches us that positive reinforcement is a very important mechanism to encourage virtuous behavior. And if you think of it, we're used to a law system where we always get punished when we do something wrong, but we never get rewarded when we are very good. And this is actually a mechanism that could reward good citizens, in a very simple way. Let's say I am a good citizen and I'm very happy to provide my mobility data to improve traffic and also to help prevent spreading of potential infections. And there I will be able to accumulate tokens. So, for example, the city authorities will sell metro tickets for tokens. I will be able to buy services offered by companies for tokens. So say I share my mobility data with the city, but I also share them with an insurance company, and the insurance company will accept me to pay in tokens for my insurance. So say one day my car data can be valued 1 token, and with 100 tokens, I will purchase a year insurance on my car with a 20% discount. So it's a mechanism to reinforce positive behavior.
We have a question from the audience, from Sonia, and thank you, Sonia, for such an interesting question. Smart contracts and trustless legal acts could have a huge impact in defining the digitization of administrative and bureaucratic services and functions involving any kind of paperwork. Although this opportunity could bring to higher efficiency in public services, and although the blockchain has been around for more than a decade, which I assume Francesco will tell us a little bit more about because he's been on the story for the past 7, we still lack any experience of local governments implementing these kinds of solutions. And Sonia's question follows with, could you think about any reasons why this is happening? Why we have the solution, the technical solution, why it's not catching up and, speeding as it should?
Well, blockchain has been around for 10 years. Yes, that's true. But the reality is that we are beginning to discuss about it, for more than, cryptocurrency applications. We have started the discussion over the past 2 to 3 years. So the discussion until 2017 was pretty much focused on cryptocurrencies. And the jurisdiction is quickly catching up on it, and many countries are establishing legislations to actually enable smart contracts to be used legally. But this is still, in a process. This is still a process. Some countries are more far ahead than others. For example, Malta and San Marino in Italy actually have already developed a legislation with that. The Italian government is still in the consultation phases, but some progresses have been done. What's important is actually that the European Union, and you might have seen the quote. You might have seen a quote in my presentation, but I can share the document with you. In the latest data strategy document, the one that was published in February, the European Commission states very clearly that they think that new decentralized technologies will provide citizens with a way to have a more granular control over access to their data. And they expect this to be something to develop in the future. So yes, it's been around for 10 years, but in terms of smart contracts applications, we are still in blockchain's infancy.
Elena will stay with us throughout the webinar. So if you have any other questions for her, feel free to put them in the comments. I have a question for all of you regarding this, because Elena has mentioned regulation. And one of the discussions that we had within the project is that the blockchain is sort of conceptually the idea of dysregulation, unregulation, lack of regulation and freedom. How does this fit, this trend of the European Union to regulate something that's conceptually not exactly regulatable? So who'd like to jump in on this? Elena, do you have an insight?
Well, I actually think it's just a different way of regulating things. It's not about not having regulations. It's just about having regulations that are based on consensus. So it's a much more democratic way of having regulation. And most importantly, it doesn't require citizens to put their trust in one single centralized entity for these regulations, because they can be executed by the community. So, blockchain will evolve from a technical viewpoint. I'm sure that what we are seeing today will be very different in 10, 15 years' time. But the key concept of decentralization will stay.
Mm-hmm. Massimiliano, any insight?
I think this is a very complex topic because, as you said, blockchain, cryptocurrencies are the key concepts are around not having a control. So, or at least trust in mathematics and in consensus more than on regulation and laws. I think we are really at the beginning of the process because in this young industry, we have seen different moments. and the conflicts, let's say, between regulations and the new blockchain unregulated is still happening. If you any one of us, for example, heard about Libra project that was proposed as a new money, a new decentralized money, and I see also from Elena that there are different opinions in the field. So, but at the same time, Libra was proposed by a global corporation like Facebook, something really new, because in the past we have stable coins, because at the end Libra is a sort of more regulated stable coin compared to Tether, for example, that is present in the market from years. So I think the situation is really, really complex, both from a technical standpoint, but also from a legal standpoint. And so it's difficult to predict what will happen. But for sure, this is an exciting industry for legals and for technicals. So let's see what happens.
Francesco, if we have a look at your website, we will see that you have been in the story of the blockchain for the past 7 years, which means you pretty much covered up the entire history. That doesn't mean you're ancient in the blockchain, but you definitely have an experience about it. You have also started 2 companies in the field, so your insight on this is relevant. Passing the floor to you for your presentation, what's your insight about this story, about the regulation versus regulation by a union or by an authority versus believing in the mathematics of 1 and 0 rules?
Well, it's a very interesting topic, because you have the European Union that is trying to control everything about the privacy to protect citizens, and this is a positive activity, of course. But on the other side, blockchain is trying to push back the control of the data to the citizens, so they don't need probably a strict regulation, because they can control their data using a self-sovereign identity management. So blockchain enable this kind of new opportunities in control our data. And in my opinion, from a technical point of view, we don't need a particular strict regulation, because every regulation has some kind of weakness. And so, for example, corporation can find ways to use our data, even with the best regulation from European Union or every country. So what we need is to educate people to control their data, to control their, I can say, private keys, because we are talking about blockchain. So private keys are the first, the first goal for a new education of people using blockchain products and services. And this is very important, because if people can understand how much is important to have the control of their private keys, they can understand how they can control their private data as well. So the two types of things are very close, and I think that every regulation will be not enough to protect citizens. We have to put the problem in a different point of view.
Because you have mentioned, and we have a series of questions from the audience until you start your presentation. We have a very technical one from Antonio. Thank you for the question. For these applications described, what kind of blockchain should be used, private or public?
In my opinion, I believe that public blockchains permissionless are the best choice, because private blockchains are a new kind of distributed databases. So the real value inside the blockchain technology is to using a public, open, permissionless, a bottom-up system that can be used by everyone. Of course, this system needs a consensus algorithm, a consensus system. But if you have a private blockchain, you have the same problems that we are trying to solve with the blockchain technologies. Of course, there are some particular use case where probably a private blockchain will be more usable for compliance reasons. For example, let's say that a government want to use a private blockchain, a consortium blockchain, to offer a public service. In this particular case, can be better to use a private blockchain. But in my opinion, we will see a transition. And so in 10 years, we will speak only about public blockchains. With the internet, it happened a similar process. When you had the first public internet, you also had the Ethernet and the wide area networks. So today, no one uses wide area networks. Every company, every citizen, every users, every one of us use only a public common internet. And I believe that with blockchains, we will probably have not thousands of different blockchains like today. That we have more than 3,000 different blockchains. But probably we will have 5 to 10 main blockchains for specific use case. We will use side chains. So technically specific blockchains chained to the main blockchain, like we can have, for example, for Ethereum. So my answer is public blockchain is better in general.
Elena, do you agree?
I think that Francesco has made a very good analysis. Of course, public blockchain provides the highest level of consensus, and I think that yes, it will become the blockchain when two key problems will have been solved, and these two problems are tied to the cost of transactions, which at the moment is unpredictable. It's highly volatile, the famous cost of gas. And so this is unacceptable for both institutions and for corporations. And a huge delay that miners could put on low value transactions. And so that's the reason why in certain scenarios, rather than private instances of public blockchains as somehow preferable, and where there still can be a number of participants high enough to guarantee a certain level of consensus decentralization.
Okay, Fabio, what's your insight on this whole story?
Hi, hello everyone. I would comment the topic of regulators, and I think the best strategy for regulators would be to establish a sandbox and see how things evolve in this field, because it's very difficult to derive the rules before observing what happens. And this strategy has been successful, for example, in the financial field, where most European countries are establishing sandboxes to let the companies experiment and try to see what happens, because no one knows exactly what can be the benefits and the outcomes of these experiments.
Just for our audience who may not be particularly technical, can you tell us in one word what's a sandbox and how would that work?
Okay, the sandbox is a term derived from the games that babies make. So it's a box full of sand where babies play and nobody gets hurt. It's exactly the same concept applied to economy and to technology. So it's a place where companies and users can experiment without real effects on what happens. It's just an experiment that is used to derive the rules and to understand what happens without dangerous side effects. Okay, so before establishing a law, for example, probably the best strategy is to see in action a particular situation, for example, a fintech company creating assets or tokens and selling them, but without all the bureaucracy and all the regulations, and then derive the rules and to make a law that will regulate the field.
And that would be closer to reality. Yeah. We have two more questions from Ricardo. Quite interesting. However, because we still have three of our gentlemen in this conversation, which is quite gender balanced. Yay! Good for Viteco to be gender balanced in the webinar. Francesco, the floor is yours.
Thank you. Okay. Can you see my screen?
Yep, working.
Perfect. Okay, my presentation is about the decentralized economy. I think that it is very important to understand how this technology can enable a decentralized economy. First of all, a quick introduction on myself. I'm a consultant, I'm an entrepreneur in this industry. I'm working in this industry since 2014. I'm also a mentor and evaluator in some European projects, and I have a certification from MIT on blockchain technologies. My company, Brightnode, provides advice to startups and large companies who want to enhance their business with distributed ledger technology. Our company is a Swiss company, but we have also in Italy, with me, we offer services for the Italian market. The topics covered in this presentation will be, of course, decentralized economy, and I quickly speak about Bitcoin and cryptocurrency, the token sales, and in particular the digital assets, the tokenization, services, and then the STO. What is an STO? So let's start with the decentralized economy concept. Decentralized economy means that the blockchain is something like a framework that open the direct transfer of value. In particular, if you think at internet, internet is the network of the information, and blockchain is the internet of the value. Of course, this value is not only a monetary value, but you can use blockchain also for other different use cases. In this framework, you have different parts, and every part has a different point of view. For example, the KYC in the blockchain economy is different from a centralized economy. The legal framework, this is an ongoing process. Elena talked about this, and the legal framework is right now probably the main issue to open the real potential of this technology, because not every country has already produced the legislation for this business, because blockchain and cryptocurrencies, they have some substantial differences in respect to traditional technologies, to traditional financial services. So the core part is the protocol. You can think about blockchain as a protocol more than a simple database or a public ledger. The second important opportunity that the blockchain opens is to use a public ledger to transfer money directly. So the first asset that we have and we use, the most popular asset is the money. I can say tokens or coins, because this ledger is the answer to the Milton Friedman observation at the beginning of 2000, when he said that the internet was missing an electronic cash. So what Bitcoins brings to the financial and to the economic market is the possibility to have an electronic cash. This is an important innovation. And so Bitcoin first was electronic cash. Now, almost more than 11 years after started, because Bitcoin started at the beginning of 2009, the white paper was 2008. But today, Bitcoin is something different. It's an investment asset. What I mean is that Bitcoin and some other cryptocurrencies, in this moment, they are an asset of investment like gold or silver. So why they are so important? Because they are not duplicable, because they can't be duplicate like a normal file. What Bitcoin solved is to have a digital object, let's say a file, that can be duplicated. And this core value transformed the innovation first in a digital money use case and then in an investment use case.
Francesco, I know that I promised not to interrupt, but sometimes I can't help. We've been having this debate within our project, which is, again, not solely focused on Bitcoin and cryptocurrency. And you have partially answered it. The debate is the Bitcoin or the cryptocurrency a currency or an asset? Because in economics, the distinction is quite clear. So from your point of view, because you've mentioned both terms, what is it? Is it an asset or is it a currency?
Well, in my opinion, it's not a currency, because only government can issue a currency. So it can be a coin. Of course, you can send and receive Bitcoins. So it is a coin, but it's also an asset, because right now the market is interested in investing in Bitcoin as a digital gold. So if you buy Bitcoin now, you probably are buying Bitcoin to hold Bitcoin for 3, 5, 10 years.
As an investment.
Yeah, it is an investment right now, because the market, the adoption is not still so large. So we don't have yet enough people using cryptocurrency for the daily use. So in this particular phase, we are in a transition. I believe that in 10 years, Bitcoin will be used as a daily coin, as a daily crypto coin. It won't be ever a currency in the sense that only government can enforce fiat currencies. So it is something different, in my opinion.
Okay.
So, Okay, I go
Thanks
on.
for the answer. Please go on.
Yeah, okay, thank you. So what are the key points for digital assets? The key points are that the blockchain is a shared and distributed ledger that is immutable and safe, and it allows you to make transactions without intermediaries. So every kind of assets can be transferred using blockchain without using banks or other financial intermediaries. And the management and transfer costs and times are lower than the current system. Here we have a problem because right now, for example, if you use Ethereum, costs of transactions are really high at this moment because the Ethereum blockchain is full of transactions. The capacity of daily transaction is at the maximum, at the peak. So we need to, in part, use other blockchains, like, for example, Cardano, Algorand, or other blockchains, or to wait Ethereum to transition to the version 2.0. The main areas of use of blockchains. So my speech is in particular on digital assets, but we have, of course, the case of digital money, the certification and copyright use case, digital identity, the supply chain management, and the crowdfunding. An important aspect that I will cover now is the crowdfunding using tokens. So this decentralized economy allows companies to raise money using a token sale. And this token sale is a very important innovation because every company in the world can do a token sale. The problem is the legal framework is not a technical or an economic problem. So, of course, we need a regulated market, and so we need that governments do the right things about regulation. But technically, everyone in the world can do a token sale, raise money for their project. This is a very huge innovation. You have a difference between utility tokens and security tokens, and this is a categorization that FINMA, the Switzerland Authority on Financial Markets, did for the market in 2018. And so the different kind of tokens have different use cases. For example, security tokens, they need more compliance than, for example, utility tokens. So it depends on your project, on your goal, on your target, and your kind of token buyers. And you have to comply with more strictly rules in the case of security tokens.
What's a hybrid token?
What? Sorry?
What's a hybrid token? The last one.
Hybrid token is, for example, a payment token that can be also an utility token. Mm-hmm. Let's say that you want to access my service, and to access my service, you have to pay. So it is a payment token. But with the same token, you can also access another services, and you don't have to pay, but you have just to hold that token. So utility tokens means that you can access different services or different opportunities without paying, without spending your tokens, but, for example, just holding in your wallet. So mm-hmm. This the DApp, the decentralized application, check your wallet, see that you have an utility token on your Ethereum wallet, and allow you to access to my service, for example, for our streaming services or other kind of services in the blockchain economy. We have a lot of experiment, or a lot of real world case of utility and payment token together. For example, another example is an exchange that offer premium services only if you hold the token. This can be an utility token.
Okay, thank you.
So the key points for a security token offering are that the security tokens enable the opportunity to have equity or revenue sharing using programmable financial products. So if you compare this with the traditional equity crowdfunding, with the STO, you can enable the token to receive automatically, for example, a part of the equity of that company, or the other service can be to receive a revenue automatically every 3-5 months in your wallet. I personally use an STO token. At every 3 months, I receive in my wallet the revenue sharing of that project. It is really an innovation. Other important aspects are relative to the tokenization, and tokenization is the, with tokenization you can transform real assets like real estate, fine arts, etc., in token. And for example, the Liechtenstein has the more innovative legislation about this. So if you go to Liechtenstein, you can legally tokenize a real asset and transform it on a token. I talked about the other points. So the greater efficiency in the market in transferring the management of the investment. So to come to the end of my presentation, what can blockchain do for the digital asset industry? In fact, you can issue a token very easily, and you can do a trading very easily. The problem is legislation and liquidity, because for legislation we have to wait a comprehensive, a uniform legislation in Europe, but not only in Europe, of course, because it's an international issue. And then the other problem is the liquidity. So we need a market more large that can allow to have more liquidity to do the trading. So with this, you can have, for example, a portfolio of digital assets on your wallet. You can imagine to have a wallet on Ethereum where you have Ethereum coin, for example, the token of the real estate in in Malta or in Estonia, and another kind of real asset tokens, and then you have easily a rebalancing of your portfolio. You can do it directly without passing through different middlemen. And so the asset life cycle is very efficient and the costs are lower. This is my last slide. This is the infrastructure for digital assets. It seems quite complicated, but it is not. So we have different layers, and from the user perspective, the user can just use a normal wallet. They have to do a KYC and AML check, because when you talk about digital assets or security assets, government require to do an important compliance, and so you have to send your documents to to the token issuer. But in the future, maybe we will have a self-sovereign identity system, so we won't have to send our private information, private documents to a central counterparty that can be risky. So thank you for your attention. I hope to be that you appreciate my presentation. Thank you.
Thank you so much. Well, that was actually and that would be my first question for you. This is the fear of the state, of central banks, the fact that this whole decentralized system actually increases the risk of funding not very wholesome activities, so to speak. That's why the AML, the anti-money laundering regulation that you have mentioned, is focused a lot on the trading of these tokens and so on and so forth. Which actually, so the question is, you have mentioned that hopefully in the future we won't be able to, or we won't be required to send in our validation of who we are. But that's a regulation that comes with the AML. How do you think it will happen? How can we merge the two? Me being able to prove that it's myself and I'm using the tokens for normal activity. Also, me being able to maintain the privacy of my own data, because Elena has mentioned it previously, and also being able to soothe and mitigate the risk of money laundering, funding terrorism, and so on and so forth.
Well, we should start from the beginning. The government should connect the real identity, for example, of Francesco Piras with a blockchain public address. And I should have of course, I should be the only in control of my private key. So the government say Francesco Piras is linked to this public address. From this point, every information that, for example, I store on my device, in my phone or my PC, every private or document information, let's say my passport, for example, is stored, and I can produce an hash of this document. And then, if some authority need to check my document, he have to check only once, because the hash is stored on my device. I don't have to send the document every time to different providers or public authorities. The provider or the public authority has to check only the hash. If the hash is changed, there is something different, and so they need to do another check, a new check. If the hash is the same, with the self-sovereign identity paradigm, I store my personal documents on myself, on my side, and so it is it's an important change of legislation. Of course, it will take a lot of time to develop this kind, but for example, in Switzerland, there is a town in Switzerland that tested the usage of a public blockchain. So the public address of a citizen is used to identify that citizen. So if the government start to consider blockchain identities valid, then the problem of the documents is easier to solve. We need to start from the identity part, and then for the document we can use a paradigm that already exists. So conceptually we already have the solution, but it is a matter of legal framework and of course political choices. So politics need to understand and need to decide to open to this kind of innovation. It will take time, of course.
Which actually raises, and some would say, opens the door to two questions that we received a little bit earlier from Ricardo, whom I would like to thank for having the patience with us. So Ricardo is asking, don't you think that there will be an inherent and huge conflict with any other kind of institutions having financial or political power? And the second one is about the environmental impact of proofs of work and other computationally incentives. Shouldn't they be regulated? So the idea is this change in paradigm, as I understand, because it will take a huge leap of faith from the governments, from the administration, to change their entire mindset. Not asking for your ID, not asking for your signature, not asking for your stamp from the company, and so on and so forth. Will this not be extremely hard to implement? I mean, will the resistance from that political part not be hard to pass, insurmountable to some extent? And that's a question for all of you.
Roxana,
Sure.
if I can comment also on your previous question about the use of cryptocurrencies, tokens in, let's say, in a black manner. Okay. So this is a real problem, because we know that blockchain is something exciting, something that opens a new world for all the society, but in the same way, the problem of money laundering is huge. But we must say that there are, for example, technologies to solve this issue, or at least to address this point. For example, we can mention Chain Analysis, that is a company dedicated to the analysis of blockchain transactions used by financial institutions and government to understand what happens in blockchain. Because blockchain is really open, okay? It's anonymous in some way, or pseudonymous, but it is possible to analyze the transactions. And so this is an issue, of course, but we can say for sure that the majority of money laundering today happens in banks, in normal financial accounts. So because blockchain is still really a small part of the economy. So the problem is huge, but there is possibilities in some way to address from a technological standpoint. And so there's no final answer. So the problem is open, but there are technical possibilities.
So actually, Ricardo's question is, yes, but any sort of disruptive technology or disruptive model creates conflict.
Yeah, and so for sure, coming to the question of Ricardo, big financial institution will try to stop, but we are also seeing that some very large financial institution like Goldman Sachs or JP Morgan is starting to hire people with blockchain skills. They are starting teams to offer digital asset services. So I think that the situation will change. Maybe we need years for this to happen, but also the financial institution will understand that this is a technology that provides benefit for all, costs open, and so at the end, so it's like internet. If we remember, maybe 20 or 25 years ago, when internet started, the general idea was that never a bank will use internet to offer services. And we know without home banking and digital banking today, banks are dead. And so I think the same will happen with blockchain. So the adoption is low, but also the large financial institution will adopt in some way the blockchain and also cryptocurrencies. For example, it's interesting to mention today that many central banks are working to a sort of central bank digital money. Okay, and so there's a lot of things happening in the industry. So let's see.
would that be what Ricardo came back to us with, the idea that they're trying to take control of the technology instead of stopping it, you know, join them if you can't stop them to a certain extent? Because you have mentioned, and that would be passing the floor to Massimiliano, who is the CEO of Coinnect. You have mentioned AML, and you have mentioned the fact that money laundering takes place through banks right now, and that is true. That's an assessment that any risk manager will agree with. However, you have mentioned, and Francesco has mentioned as well, the idea of money and the idea of privacy in the context of this identity that Elena has introduced us to. The most private way you can pay is with cash, because that's not traceable in any way, shape, or form to you, unless, you know, you're using fingerprints or stuff like that. Will digital currency issued by a central bank or not, issued by a financial institution or not, provide the same level of privacy as cash, or be just a safer way to do digital transactions?
Question for me?
For everyone, but it leads the way into you as well.
Okay. We still need to see the details of these central bank digital currencies, because there are, at this moment, these are projects, not any real case. Mm-hmm. But I think at the end, a central bank will control in some way these flows. So I can't expect that a central bank will release a digital money that is completely anonymous. Uh-huh. And so I think at the end, cash or other forms of cryptocurrencies, for example, Bitcoin, it's not so anonymous, but there are different anonymous coins in the market. In this moment, these are the most anonymous coins. And so if you want to spend money, let's say, or cryptocurrencies in an anonymous way, you can use anonymous monies, but this is true also for criminals. And so it's like fiscal events, okay?
So I know you have a presentation on the topic, and let me not keep you from that.
Yeah.
Okay, so we should be able to see your screen right now.
Okay, you see my screen now?
Yeah.
Okay, so I can try to go very quickly on the presentation, and I will speak about DeFi. That is a sort of new sector, a new emerging trend in the blockchain industry. Just a quick introduction about myself. As you said, I'm the founder of Coinnect, that is a Swiss consulting company, and we operate between Switzerland and Italy, providing technology consulting, software development, system integration in the fields of blockchain, cryptocurrencies, and cybersecurity. Before starting Coinnect, I worked for about 15 years in cybersecurity for different global technology companies. Okay, so many of us have heard about DeFi, that basically means decentralized finance. So the concept of DeFi is something that is around in the market for years, but in the last months we have seen a really fast growth of this new sector, and many projects around these that I will mention some of these in the next slides. So basically the idea is that anyone with internet access can use DeFi services without the need of a central authority. And so smart contracts, decentralized applications will become in sort of way providers of financial services. And so we receive these services from the blockchain and from the code of smart contracts that will provide us some financial services, okay? And I explain in more detail. This is today, let's say, a map of the ecosystem of DeFi, and you can see it's really complex. Also, if this sector is quite young, for sure, younger of the blockchain and of Bitcoin. And so what is happening is that what already exists in the traditional financial world is migrating, or there are cases of financial application built with blockchain. And so we can mention payments, we can mention stable coins, and we already discussed about that. But for example, lending or decentralized exchange, so concepts that already exist in traditional finance are now possible in a fully decentralized way. This means that no central authority has control, but the majority of these services are directly offered by smart contracts and decentralized applications. If you look at this graph, you can see how fast is the growing in the last year. So, for example, this graph show the total value locked today in DeFi. So this means that there are about $10 billion locked in DeFi. And we will explain with some example what locked means. But basically, there are 10 million that users invested in some way in this new sector. And as you can see, the growth is exponential, especially in the last months, starting from April, June. We have seen a really, really fast growth of this industry.
Why do you think that is the case? I mean, why in this particular time in which you have a lot of uncertainty in the market, you see people flocking in to invest in this type of an asset?
Oh, I think there are many reasons. So this is something new for who holds cryptocurrencies, because DeFi in this moment is fully possible with cryptocurrencies. So for example, I make to you this example of lending. So lending means that you put assets, in this case, or cryptocurrencies in a smart contract, and you receive interest. Two of the most famous projects are these two I mentioned, so Compound and Have, and you can see the interest they provide. So this interest is really, really higher compared to the interest you can receive from a normal bank. If you go to a bank and you ask how much is the interest if I put $10,000 in my bank account, you will receive really, really a bad answer, because the interest is really low at the moment.
In Romania, it's less than 1%.
Okay. In some case, you should pay the bank to keep your money. Okay.
You are, because of inflation, so that's fine.
Yeah. And so in crypto, it's happening something really, really curious, because you can receive a high interest at least compared to standard banking services. And everything is regulated basically by a smart contract. Often, some of these projects also allow people participating on this on the project to also vote and express ideas about how the project should work. So, for example, changing the algorithm, or introduce a new feature, or reward people for some specific action. So let's say this is a sort of democratization of finance, okay? Especially true in the case of lending, because and this is also this that I'm mentioning now is also a very critical point, because, for example, you can put $1 million and receive interest without any know your customer at the moment. So because these smart contracts, these protocols don't request any know your customers to you. So maybe there are a lot of cryptocurrencies and people that don't want to demonstrate and show the identity that can receive interest without do any know your customer. Okay, and another case I mentioned is decentralized exchanges. So everyone knows about crypto exchange in general. For example, very, very big crypto companies today that has had a very huge success, like Binance or other large cryptocurrencies. What is happening now is that it's possible to change crypto and do trading basically without the need for a central exchange or a central authority. So you use these protocols, these smart contracts, and here you find two examples. One is more dedicated to the change of stable coins, that is Curve Finance, and the other one is dedicated to decentralized change of any RC20 token. And so with these protocols and smart contracts, you can change crypto and tokens without using any central authority. Okay, this is another application of DeFi. And as you can see in this graph, there are about 1 billion locked in Curve Finance and roughly the same in Uniswap. So these projects are really successful at the moment. So basically, this was just a very quick overview of what DeFi is.
Before we move on, you promised to tell us what locked means.
Yeah, locked, for example, in the case of lending, means that it's the amount locked in the protocol, in the smart contract. So Compound, that is an example of crypto lending smart contract, at the moment has I don't have the number here, but billions or hundreds of millions locked inside the smart contract. So
and
you
this is a value that increases, right?
You deposit. Let's make an example. You deposit Ethereum, and you receive a token that represent Compound, and that you can use to have back your Ethereum. So you receive this interest in this form of token, but in any moment you can give the tokens back and receive what you have deposited. So it's like that. If you go to your bank for to receive a lending, then you want to close the lending, and you should follow the procedure of your bank. In decentralized finance, you just send the tokens back and you receive what you have locked. Okay. Let me ask you. Just you see my screen, yeah?
Because yes, perfectly. We see it.
Okay.
We see it. Yeah.
Because I suggest to the audience, if you want to understand more about DeFi, to go to this website, DeFiPulse, where you can find all these informations and also all these tokens and projects. So you can, for example, Compound, you see locked value at the moment about 700 million. And so you have all the projects and the smart contract categorized. You find lending, you find decentralized exchanges, you find derivatives, payments, and for each project you find the description and also an explanation. And so this is, I think, useful if you want to understand more about this new world. Okay. And so just to end my presentation, at the moment, the market capitalization, so that is something different of the locked value we discussed before, of the overall DeFi projects are about 14 billion, okay? And so really, really a huge growth compared to the last months, as we say. What we can expect is that this sector will grow, and we will see for sure a number of projects coming, and so new projects, new ideas, new startups, implementing new use case and new projects regarding DeFi. And the last point, interesting to mention, especially for who understand more about blockchain and the technicalities, the majority of these projects today are built with Ethereum. So one of the most famous blockchain. But what we expect is also that this will change, because there are others blockchain coming that want to take part in this new game of DeFi. For example, I can mention the Binance Smart Chain, and also Tron, that is another blockchain that is investing a lot to let the DeFi ecosystem grow. And so I think this is a really exciting industry, and we are really just at the beginning. So I suggest to everyone to look at what's happening, because there are many opportunities to create, to innovate, to launch startups. And so this is, I think it's really important for young generation to understand this world and maybe create something in this new industry.
We have a question before mine.
Yeah.
You know, the moderator can ask questions, but before mine, we have Andrea, and they were faster than me. And it's a question directed to Massimiliano. Of course, if any of you would like to add further on, please feel free to do so. The first large-scale use case for blockchain is given by cryptocurrencies. While blockchain proved to be an extremely safe method to transfer data, banks and other financial institutions still resist to change their payment infrastructures and maintain traditional and inefficient ones. How important can be the contribution of the financial sector to the general spread of blockchain as a general purpose technology? And I think that's the entire question.
My idea is that the financial industry at the end will, let's say, embrace blockchain, will use blockchain. We should be honest, we also have at the moment some issue regarding scalability, okay? Because as, for example, some of the speakers mentioned it before, today the cost of transactions is not so low, the scalability is not so high. So I think the financial industry will adopt blockchain, but it will take times for a technical reason, but also from what we discussed already about the regulation, because it's really complex to regulate and to translate in something that is good for traditional financial industry to use blockchain, at least public blockchain, okay? That is, I agree with the speakers, in my view, the public blockchain is the only blockchain, okay?
So, you know, blockchain believer till the end. Actually, within this project, we're collaborating with a lot of companies like yours to increase this knowledge about the blockchain. And in Romania, we had an intervention, and we're actually collaborating stronger with MasterCard. MasterCard Central and Eastern Europe and MasterCard Romania. And MasterCard just announced, I mean, a couple of hours ago, that they are providing a testing platform for central bank digital currencies. So the payments ecosystem is starting to have a look at this to provide, because Fabio was mentioning earlier the sandbox. So they're trying to get in on the conversation in order not to have that resistance that Andrea was mentioning, to have a smoother diffusion process. Because if there's one thing that I have learned myself as a master in finance, is that the financial industry kind of has a very high threshold for risk. So any sort of new disruptive technology will have to prove itself before being embraced fully. Which is kind of counterintuitive with the speed that the blockchain has. So I'm going to leave the news about MasterCard in the comments. But working on that and on what Massimiliano said, this whole solution, that links to Francesco's presentation as well. How am I when most of my transactions will take place in a digital environment? How can I trust that data will not be misused? And that links us to Elena's presentation in the beginning with the digital identity. Trust is a key word about the blockchain. We have started from that in our project. But the idea is, let's say that I'm not a coder, I'm not a programmer, I'm not a financial specialist. I don't trust banks all that much. So I'm like a normal person, you know? How can I trust that this platform or your solution or your token or the other company's token that will be safe for me to use them, that I will not, you know, at some day wake up close to my pension and not have any money, and so on and so forth? And that's a question for everybody.
In my opinion, for example, there are a huge difference between the main blockchains and the other ones. If you consider Bitcoin, Ethereum, for example, it's really impossible to manipulate the ledger, because the consensus and the miners, the proof of work, the mechanism, of course, Ethereum will go to the proof of stake mechanism. But anyway, the incentives to have a stable and a safe protocol, a safe ledger, are really efficient, and they are working. Bitcoin is working more than 10 years now, 11 years. So you can be confident, if you use Bitcoin, for example, you can be confident that it's almost impossible to manipulate the transactions. If you use, let's say, a new token, maybe the problem is not the Ethereum blockchain, but the problem can be the smart contract that create the token, that set the rules for the token. So it depends. I think that you have to understand. People need education about the differences between different kind of blockchains, because not every blockchain is the same. Not every coin or tokens is the same. If we consider central bank digital currencies, it's totally different, because central bank digital currencies, they want to use the blockchain just as a network layer, just to transport transactions, and not for the consensus, not for the monetary policy. This means that the control over the monetary policy will remain in the government. It is different, because the government, with the central bank digital currency, they can monitor it, they can track every transaction and link this transaction to every person. So it will be a scary tool for government, in particular for dictatorship or other not very good government. But the problem is Bitcoin is another thing. It's different because if you take some part of the system, an important part like the consensus, for example, or the algorithm that define the policy of the coin, it is a different thing. And so maybe you have to be aware of these 3-4 main differences.
Well, that's a good thing to make note of, Beatrice, because in our platform, in our project, apart from these wonderful conversations that we're having, we're also developing an educational platform in which we talk to specialists and we provide these bits to clarify and to increase the level of education in the larger audience regarding the blockchain. So it's a good thing to make note of what we should add there. Elena, we'll get back to you because before coming to Fabio, who's from the government to a certain extent, how do we make sure that the governments will not use these technological tools to convert our society into 1984?
Well, that's exactly what our data ownership platform stands for. By decentralizing data access and putting it to our own hands, the citizens, we will be the ones who decide who will actually use our data, and we will be able to interrupt the flow of our data to that particular entity, to that particular institution, to that particular company at any time. So that's exactly the idea behind our invention.
So we have a thing, and it links to Antonio's question that you can see on the screen right now. If it's a software, so if the smart contract is a software, and it sets these rules in which I can, stop the flow or increase the flow if I want to. Antonio's asking, which role can a human programming error have? Is that an issue?
It's a big issue. It's a big issue because if the smart contract has an error in the programming, could happen very, very bad things. For example, we have seen cases where millions of equivalent of Bitcoin or Ethereum has been locked in the smart contracts due to errors in the programming. But the good part of the story is that often smart contracts are open, are open source, so the community can check and see if there are errors inside. And so this is an issue. If you have a problem with your bank, if you send money to the wrong address, you can call the bank and say, hey, I have done an error, please do something for me. If you send, for example, Bitcoins to the wrong address, you can call anyone, basically.
Tough luck.
And so this is for joking, but we should understand that these technologies are still in an early stage of development, and the security of these technologies is a really key point. So there are companies, for example, just to complete, that offer auditing of smart contracts. So before they make the smart contract runs in a blockchain, you can have a full audit and control that the smart contract is correct.
Correct me if I'm wrong. One key issue or one key concept of this whole blockchain technology is disintermediation. The fact that it eliminates intermediaries. By adding an audit of a smart contract, doesn't that mean actually creating a different type of intermediary?
The audit is on the code, so it's not someone that control the smart contract. So the audit means that someone with the right skills, the right programming know-how, check the smart contract and try to understand if there is some programming error or security issues. So it's a audit on software. Mm-hmm. So then you deploy the smart contract in the final version, and so the smart contract operates without any control. So, in my opinion, you still have the decentralization. It's just to check if there are errors inside the code.
It's obviously you have the decentralized part, but the idea is you still have a trust vector, which is this code auditor that will appear. And why I'm asking this is because in this project, we're also screening for new skills and for new jobs, for the future. And this is the type of job that will appear. I mean, you're not coding yourself a smart contract, but you develop the skills to evaluate existing smart contracts. Great. Fabio, we will pass to you and your presentation. I haven't forgot that we have still an outstanding question from Ricardo about the regulation of the environmental impacts of proofs of work. I'll have to repeat that several times. But we'll get back to that question. So Fabio, your presentation.
Okay, so let's start with my presentation.
Fabio, apart from being the CTO of TokenFarm, is also part of something that has increased the level of jealousy in Romanians. The fact that the Ministry of Economy in Italy, of Economy and Development, has a blockchain task force. Yeah. We don't have that.
Yes.
We would like that.
Yeah. Okay. So let me introduce all this stuff. My name is Fabio Lecca. I will talk to you about two main use cases of blockchain, which are digital identity and food supply chain tracking. First of all, I will introduce myself a little. I've been working on software projects for over 20 years. And in 2018, I've been selected as a member of the blockchain task force by the Italian Ministry of Economic Development. So I'm a consultant. I'm not in the government itself, but I am a consultant. And in particular, my main interest is in agriculture use cases of blockchain. And currently I'm the CTO of TokenFarm, which is an innovative startup by Coldiretti, which is the biggest Italian association of farmers, which includes more than 500,000 farmers. And we focus on blockchain applications in agriculture. In my speech, I will describe, as I said, two main use cases, which are digital identity and applications in agriculture. And I would like to anticipate two common objections to blockchain projects. These are, it could be done with a database, and it is not ready for production. So I will try to answer to these objections. First of all, let's begin with the digital identity. In this slide, we can see a cartoon from 1993, where in the early days of the internet, we had very, very simple use cases, and we had mainly anonymous use cases. So there is a dog saying on the internet, nobody knows you are a dog. And what happened? A lot of time has passed since then, and 27 years have passed since then. And what do we have online? We have e-commerce, we have banking, but still we cannot do some things. For example, we probably have difficulties in opening a bank account or signing up for university or applying for a job or even buying a house. And moreover, there is a statistic which says that in the United States alone, every year, 11 billion of hours are spent from people working on paperwork. So there is no digitalization of all these problems. Let's talk for a little about identifiers. We must say that interactions create identifiers. What do we mean? That when we interact with others, other people or machines create and store identifiers that are used to recognize us eventually. For example, Touch ID or Face ID. And the most common identifier that is used on the internet is, of course, the ID, which can be a username or email, and the password. But in all of this time, we have seen that passwords alone have a lot of problems. We have too many different sites, and it's not a good idea to use the same password for each site. They are very difficult to remember. And hackers hack sites and gain access to simultaneously thousands of information at once, which is referred to as a data breach. Why this happens? It happens because these identifiers are centralized, which means that they are not owned by us. They are stored on servers, and moreover, they can be revoked without our consent. There is a common solution that may be worse than the problem. It's the famous feature of logging with Facebook or logging with Google, which means that Facebook and Google are the intermediaries which we use for logging into sites, but these can cause correlation. What is correlation? Is the possibility of tracing users on several systems and building profiles on them without their consent. So to address all of these problems and try to give a solution, we have a new concept, which is the self-sovereign identity. I use the words of Drummond Reed, which defines it as a lifetime portable identity for any person, organization, or thing that does not depend on any centralized authority and can never be taken away. So we are seeing that the main keywords on this use case are decentralization and, of course, trust. So let's define what a decentralized identifier is. It is the key element of verifiable credentials, which I describe later. They are about to become a web consortium standard and are based on a decentralized ecosystem. They are a new type of identifier, something like an URL, the address we are used to on the internet. And they are created locally and autonomously by the owner at any time. And the probability of collision with two different DIDs is almost impossible. So they are independent of any central authority, and they are protected and verifiable by cryptography. So at any time, I can create a DID that looks like a very long string of characters, and this expresses my identity. And then these are the features. They are controlled by the user because when I created the ID, I own the private key which is associated with the DID. And if I write the DID on a blockchain, it may never be deleted, of course, with if I'm using a public blockchain, for example. And moreover, they are non-correlatable because if I hold a wallet which is a software agent which contains my DIDs, I can use a different DID to interact with different actors. So no one knows about my conversation with the other actors. We have a secure communications, all is encrypted by public key cryptography, and they respect the GDPR because I am the holder of the information and I control what is the information that I give to others. So let's see how we can use this new paradigm to solve real life problems. And a most important problem is that of credentials. What is a credential? It's a collection of claims regarding a single entity, which in our case is identified by a DID. In real life, a credential may be a driver license, like in this example, and the credential contains many claims, for example, the name of the subject, the expiry date, and so on. What do we do in the paper credential model, which we are used to in real life? We have a paper credential. It has been issued by an issuer. It has been given to the holder, and the holder uses it to present it to a verifier. For example, a driving license, and what happens? The verifier trusts this paper, or if in some cases, if doesn't trust the paper, can contact the issuer to have confirmation of the validity of the document. The same model applies to self-sovereign identity, but instead of simply trusting the issuer, the verifier performs a validity check, which is based on cryptography. So the verifier can cryptographically check the contents of the credential without contacting the issuer. In self-sovereign identity, the verifiable credentials are digital documents which are signed by issuers and containing claims about the IDs. A company or a public entity, of course, will have a public DID, because if we have to trust the issuer, we have to check the validity of their public DID. And what is the best place to put a public DID? It is a global directory, and for example, a public blockchain. The most important thing is that all this system preserves the privacy of the users, because on the blockchain we only find the public DIDs, the schemas, the definition of the credentials, and the revocation registries, but we do not ever store personal or private data. There are many projects.
Fabio, I will, if you will allow me for a brief intervention here. You said that your interest is mostly into an application in agriculture, right? At least in Romania, agriculture specialists are not extremely technologically oriented. So the question is, if I am a farmer, I know this, so I see your presentations, I have these elements. How can I tell how the blockchain will help me into my own stuff? Because I know from conversations with farmers, in most cases, their answer is, I have the corn on the field. I don't have the time to learn new technology that's not related to corn. So how would that help? If we may go towards the case, that specific case study, because it's extremely interesting in the connection between tokens and identity and farming.
Yes, this brings us to the following use case I will describe. I think that digital identity is the basis for, it's like a foundation for all our other use cases. And what is important about this new kind of technology is that verifiable credentials can be used as secure documents. While at the moment, we online send PDFs as attachments with documents, they are still subject to counterfeiting, for example. With the verifiable digital documents, we will be sure that with a cryptographic check, we will be sure about the validity of these documents. And this is a foundation for many use cases. For example, in agriculture, we can express some claims, for example, the declaration of the respect of biological farming as verifiable credentials. So we will trust this document more than any other document that can be transmitted online. So this is very, very important.
And we can do that extremely easy. I mean, I don't have to become a programmer or a coder in order to make use of this credentialing.
Yes, I think yes. There is still some way to go, but I am about to describe some use cases which can be used now. For example, we will use these technologies simply as users of applications on our mobile phones. So it will be very simple to receive a credential and to verify it and to present it to the ones who ask us a credential, and we are in control of all the information that we send.
You mentioned a case study. What would that case study be?
Yes, I can describe some use cases. For example, for as you can see in this slide, for authentication, authorization, also for proof of training. It can be used for degrees and diplomas. For example, to store the consent receipts for GDPR. At the moment, when we accept, when we give consent to the use of our personal information, we don't, almost never we have a receipt of our consent. The consent is stored in a centralized server of the party we are interacting with. So it would be very important to have in our wallet, which is the client-side application that we use to store all our personal information. It will be important to keep our information with us. And another use case, these are the apps which are mobile apps which are already on all stores, on App Store and Google Play. So you can download them and try some use cases which are already existing. One interesting use case, probably to let you understand what I'm talking about, is regarding Uport, which is the wallet, is the iOS application, iOS and Android application, which we use to assess our identity, and it's being used by the Swiss city of Zug to participate to public consultations. So you download an app, you as you can see in this slide, you download an app, you create your DID, you hold the wallet with all the information, and then you can upgrade your DID with in-person verification. You go to an office and you receive a credential which is stored in your wallet and enables you to interact with the public services. One of the public services that has been already experimented is answering to public consultations without going to vote, for example. It's not electronic voting, it's public consultation. So it's something different, but also very important. And then there is a very important use case that it's being developed by the European Union. It's called ESIF and is the European Self-Sovereign Identity. So it is a standard of identity for all European citizens, and is one of the first four initial use cases of EBSI, which is the European Blockchain Service Infrastructures, which is used for public services. Its goals are to provide cross-border services for citizens, to help make institutions more efficient, and facilitate economic activity flow across borders. And in the new version that is being developed, this identity will have a legal framework for interacting with eIDAS, which is the European regulation which enables legally valid applications. let's talk about the objections. All of this, when the objection is it could have been done with the database, we can answer that projects related to identity need to be decentralized so that no central authority or, for example, a bad government can perform censorship on users. And the Sovereign Foundation is the foundation which started the self-sovereign identity idea, is a global non-profit that contributed the open source project Indy to Hyperledger, and they created a public permissioned blockchain, which has been in use since 2017. So it's more than 3 years that you can use this system and build applications on this system. Okay. Then I would like to talk about my main field, which is food supply chain tracking. There is a research by the Polytechnic of Milan which says that agri-food is the third sector in order of importance for blockchain application. The first is finance and the second is public sector. There is a fundamental feature needed for agriculture, which is the recall of food, which means that when there is some problem with some food, we have to trace back that food to avoid problems and in some cases even deaths. And the recall must be very efficient in order to reduce waste. And moreover, there is a new attitude of customers towards food. Customers need trust. It's the second time we find this keyword across all use cases. And the new questions that customers ask is, for example, where the provenance, so where does the raw material come from, the quality, and also new kinds of questions. For example, if the share of value along the supply chain is fair, which means that everyone in the supply chain gets rewarded in a fair way. And also, of course, sustainability concerns. So we created this project, which is called POMOS, and it's about tracking tomato production. Italy is the first producer of tomatoes in Europe, with 46 million quintals produced each year, and is the second producer in the world after China. The project has been conducting with Princes Limited, which is an English firm which transforms raw material. The goals are, of course, traceability and provenance to ensure compliance with the requirements of individual products, increasing safety, efficiency, and automation of processes. But there is a very important goal of sustainability, which has three aspects. The social sustainability is guaranteeing respect for legality in the workforce, which is a very big problem in Italy. The environment sustainability guarantees a conscious use of resources and in waste disposal, and also an economic sustainability to recognize the right value for the farmer's products based on the price which have been established by signing a national supply chain agreement. And also, of course, this is probably the main goal, to enhance the quality of the product and to give a national identity of made in Italy. So the actors are the following. The project started in May 2019 with the signing of the agreement. We have 300 farmers in Puglia. We have 10,000 hectares cultivated, and 10% of these hectares are biological farming. The production of these farmers is 2.5 million quintals of tomatoes, and the transformation company handles 5% of the total Italian production. How does the project work? It works on 3 levels. In the physical level, all the activities, of course, take place. In the process level, we have the actors working together and controlling each other to be sure that everyone makes his part. And in the blockchain level, we have a record of all the activities of the actors in a distributed log. we have also checks. Some checks are made automatically by smart contracts, and all actors, due to the nature of blockchain, which is immutable, all actors are held accountable for their data entries. So this is very important. It's a big and coordinated collaboration effort in order to create a single source of truth. I will quickly describe the data sets of information. They fall in 4 categories: agronomic management, harvesting, transport, and processing.
If I may stop you for one second, because I'm gonna be like a beggar and hope that you can provide a much larger case study on this business case as part of our project. That would be part of our platform. We will be able to go through it in depth because it's such an interesting topic.
Yes, of course.
I would hate for us to rush through it. So I will invite our guests for a wrap up, not before asking for a promise from your side to give us more details on the business case. We have a question from Luca, and I will ask from you and from all the participants for a one-word answer. And the question from Luca is basically which business cases are suitable for disintermediation. Fabio mentioned public, administration, finance, and agriculture. Apart these 3, one business case from your side, which would be relevant. Where would you implement the blockchain if not in finance, agriculture, or public administration?
Okay, question for everyone.
So what would you add, Fabio? What industry, what business case would you go for?
Apart from these 3 main, of course, as I said, they are the 3 main sectors where we find the use cases. But as in the task force, there are people which are also studying many other use cases in many other fields, for example, in education and so on. So I think there are many use cases apart from this. A very important case is in the automotive industry. For example, we have
from Fabio, it's automotive. Elena, one word. Which business case?
Well, I can tell you about our first client. Our first client is a utility which has decided to create an energy marketplace to give all of their customers the possibility of sharing energy. Sorry, my phone. I didn't put it in mute.
No, from Elena it was energy. Massimiliano.
We for example, as we know, there are many applications of blockchain. For example, we worked with a customer to implement a sort of decentralized audit, because using blockchain, they can do timestamping of any kind of documents without trusting on any central authority that provide timestamping. So audits and certification of documents
Francesco,
is a huge application in my view.
We can't hear you.
For me, tokenization of real world. Sorry, can you hear me?
Now we can hear you better. Yeah.
Okay. For me, it's tokenization of real world assets. For example, let's imagine can tokenize our home and ask for credit, not from a bank, but from a protocol. So I think that in the future, we can do this kind of activities. So tokenization is really innovative and opens very huge opportunities to the market.
Beatrice, you had a question for our guests.
Yes, it's a small question, but maybe the answer is large. It's for all of you. You talk about digital identity that is immutable and indestructible. But my question is, doesn't it in contrast with the right to be forgotten? The right to be forgotten is the right to have your data be removed from internet. So if my identity is immutable, how this right can be respected?
Yeah, I think the blockchain offers the possibility to control your data. For example, I think Elena mentioned it. Is what she's working on, and so with blockchain you can have more control on your data, and for example have the assurance that your data has been deleted from a specific application or services, and you can have a certification about that. So I think with blockchain you can achieve a real forgetting. Instead, if you ask to a central provider, please forget me, they can say, okay, I forgot you, but in reality, they still keep the data. So blockchain will allow you more control about this particular issue.
In my opinion, for example, if I write inside a Bitcoin transaction, if I put in a special field of the transaction, there is the possibility to write some sensitive information. For example, I can write Francesco votes for this political party. So the transaction is recorded on the Bitcoin blockchains, and no one can delete or can change that information. Is stored immutably. But if you use the blockchain just to store, for example, hashes, so not private or personal information, but how can I say, links to other information that stay off chain, not on inside, not recorded on the chain. So this is the way to manage this issue, not storing directly personal information on the first layer of the blockchain.
Fabio?
As I described, with the shift of paradigm to self-sovereign identity, personal information is stored locally in our wallets. So the most important thing is that we control this information, and we can have a log of every single interaction we had with all other actors. It's important because we can trace what all the information we sent to other actors.
We started with Elena, we're finishing with Elena.
Well, thank you very much. Well, in addition to everything that Fabio, Massimiliano, and Francesco have said, we focus on actually closing the tap. So think about information coming from your device as water that is flowing from the tap. And once you have a bucket, you can actually take that information and put that away. So the remedies that Francesco and Fabio and Massimiliano have been talking about are related to static information that either stays with the source or information that is ended up in a bucket. We enable you to actually close the tap.
Awesome. That's a lovely idea to wrap up this conversation. It's been extremely interesting. I can't imagine where 2 hours went by. It just proves we have to talk more. So stay close to Project Blocks. Thank you for all our guests for spending the time with us today. We will nag them to provide more information. We have a promise from Fabio to talk more about Project Pomos. And thank you, Beatrice and Viteco, for organizing this. Stay tuned for the Project Blocks platform. Bye, everyone.
Thank you.
Thank you.
Yeah.
Bye.
Thank you. Bye.